This explainer video is part of our series covering various schemes and manuals under the EPF and MP Act, 1952. Welcome to a session on Manual of Accounting Procedure under Employees Provident Fund scheme. In this session, we will be discussing about the Manual of Accounting Procedure and how accounts are managed under the EPF scheme. EPF scheme came into effect on 1st November 1952. It applies to all factories and establishments to which the Act applies except those covered under the Section 16 and 17 of the Act. Section 16 refers to exclusion from the Act and Section 17 talks about the exemption from various schemes available under the Act. Central government sanction is required to incur any expenditure other than for defined purpose as per Act. It includes credit to individual members or in case of a deceased member to the nominees, heir or legal representative. Fund which is created under the scheme is vested with and administered by board, whereas fund is operated by the officers of EPF who are authorized by central board. Number of returns are required to be filed by the establishments under the EPF scheme and the Manual of Accounting Procedure. When an establishment gets covered, it submits a Form 9, which is the detail of the employees at the time of application. This is followed with the nomination of all the employees who have joined, particulars of the ownership under Form 5A. Every month establishment has to submit detail of the new join in the form of Form 5, and similarly it has to also submit the details of established employees who cease to be members of the fund under Form 10. Monthly member contribution due and paid along with admin charges is to be submitted in the form of Form 12A. A monthly contribution and admin charge paid is also submitted as a contribution card as Form 3A, and an annual contribution statement is submitted as Form 6A. Now we will discuss what are the conditions under which a member is required to join the fund. The day the scheme gets applicable into his factory or establishment is required to become member of the fund. Date of joining where the establishment is already covered prior to his joining. Date from which an employee ceased to be an excluded employee. A date of cancellation of exemption under Section 17 of the Act. Members were required to have a qualification service prior to 1st November 1990. This has been dispatched away with from 1st November 1990. From 1952 to 9th August 1974. A member was required to render a service of 1 year continuous service, that is 240 working days. From 10th August 1974 to 30th of January 1981 was reduced to 6 months continuous service or 120 working days. From 31st January 1981 to 31st October 1990 was 3 months of continuous service or 60 working days. Subsequent to 1st November 1990, this practice has been done away with. If there is any doubt regarding the eligibility of a member towards membership, an officer, not below the rank of RPFC, is competent to decide the entitlement, and in such case, he shall give hearing to both the sides before deciding on the matter. A member retains his membership in certain conditions. Membership continues till a member withdraw the amount standing to credit. The membership terminates on the date on which the final payment is authorized, and it is irrespective of the date of filing of the claim. A member of the EPF scheme also qualifies for membership of Employees Pension Scheme if he is not above 58 years of age, and he also qualifies for Employees Deposit Linked Insurance Scheme with no age condition. Whereas the membership ceases on withdrawal of the final amount standing to the credit of the member under the EPF scheme, whereas under the Employees Pension Scheme on attaining the age of superannuation, that is 58 years, or on death of the member, membership also ceases, in case member withdraw the benefits available under the EPA's scheme as withdrawal benefits. Similarly, the membership ceases in case of Employee Deposit Linked Insurance Scheme when member leaves service. Some special provisions like membership is independent under each scheme. A member may not be a member of the Employees Pension Scheme, but may continue to be member of Employee Deposit Linked Insurance Scheme as well as the EPF scheme. Similarly, member can cease to be a member of the EPF scheme but continue to be a member under the EPA's scheme. Such case would occur in case of an exempted establishment which has taken exemption in regard to Provident Fund scheme only and not in case of employees' pension scheme. Then every employee is allotted an account number which is called as Universal Account Number. This is allotted by employer. The scenario of retaining allowance becomes very important, which is applicable in case of a seasonal establishment wherein establishment to retain service of a member pays an allowance during any period in which establishment is not operational. Rate of contributions are an important aspect in EPF scheme. The rate of contribution under Section 6 is 10% of the basic wages plus and dearness allowance and retaining allowance, whereas the rate of contribution under the provision to Section 6 at 12%, and this is the rate which is applicable most commonly. The rate of 10% is applicable in few cases, and these cases are as followed: 1. Any establishment in which there are less than 20 employees employed. 2. To any sick industrial company and which has been declared such by the Board of Industrial and Financial Construction. 3. Establishment which has at the end of any financial year accumulated losses equal to or exceeding its entire net worth, and there are certain other industries which include jute, coir, beedi and gore gum factories. Another important aspect in regard to contribution in employer is to pay employee share in advance and recover the same from the wages of the member for the respective period, and in case member employer fails to deduct the employee share at the time of paying the wages, employer himself have to pay the employee share along the damages and interest as applicable, and he will not be permitted to recover the contribution from the wages of subsequent period, except deduction was not made due to a clerical mistake, and this to be done after due approval of the enforcement officer. There is also provision to contribute above the wage ceiling. Contribution in excess of ceiling can be allowed on any date or any limit for EPF contribution, whereas for contribution in pension fund in excess of wage ceiling, such request should be allowed only from the date it crossed the wage ceiling and not thereafter. Any such application for contribution of above ceiling should be submitted to APFC and be allowed by an officer, not below the rank of APFC. It is the duty of the APFC to give an intimation to the employer if joint declaration is not acceptable. Contribution on arrears is also an important aspect. Contribution is to be made recovered and deposited within 15 days of the payment of arrears. Establishment has to inform the period to which arrears paid and the dates of the disbursement. Where industry or class establishment covered with retrospective effect, no employee share deduction prior to date of notification is allowed. In addition to the employee and employer share, an establishment is required to pay administrative and inspection charges. These charges are fixed by central government on the recommendation of the Central Board. Minimum administrative charges payable per month for working establishment is 500 rupees with effect from 1st of January 2015, and inspection charges which are paid in respective of an exempted establishment to be paid at the rate of 0.18% of the total pay on which contributions are payable, and this has been effective from 1st of August 1998. Now we shall discuss the claim settlement process. So settlement of claim in respect of final settlement are made under Para 69 Subpara 1 Clause A. A member has to submit the claim before 55 years of age, but payment can be allowed or authorized only after attaining 55 years of age. Then there is final settlement under Para 69 Subpara 1 Clause B upon retirement on account of permanent and total disability. Then there is a final settlement under Para 69 Subpara 1 Clause C refers to settlement immediately before migrating from India or permanent settlement abroad or taking up employment abroad, settlement in case of termination of service in case of mass or individual treatment is under Para 69 Subpara 1 Clause D. But for cases of termination, VRS and female members resigning from the service for getting married, that is under Para 69 Subpara 2, settlement can be made without waiting period. Settlement cannot be made without any waiting period, even when a member is discharged and compensated for treatment under Industrial Disputes Act, 1947 in case the member is transferred to another factory or establishment which is not covered under the Act. The settlement can be made only after the 2 months waiting period. In order to claim immediate settlement. In case of a permanent disability, a medical certificate is required. Settlement under Para 69 Subpara 1 Clause DD refers to termination of service under VRS mutual agreement. Waiting period applies in claims settlement. Other cases of advances are covered under the video on EPF scheme. Here we will be restricting only to the aspect of the relevant provisions regarding the imposed recovery of advance. The circumstances in which withdrawal made under Para 60 Subpara B is recovered with penal interest when the advance amount has been utilized for a purpose other than the defined purpose, or member refuses to accept the allotment or acquired dwelling website or their conditions of advances, which have not been fulfilled, or excess amount is not refunded. Any amount remitted back to the member by agency is not refunded. Recovery order sent to the employer for deducting the amount of advance and penal interest from member's salary, indicating the number of installments. Assistant Provident Fund Commissioner is the competent authority to enforce recovery of advance along with interest. The amount of 60B refunded should be credited first to the employer. Share to the extent advance granted out of the said account. 2% per annum is the penal interest to be charged upon recovery of advance. Upon recovery, enforcing recovery of advance along with interest. No further advance is permitted and withdrawal is permitted after 3 years of full recovery with interest, and interest is to be credited to the interest suspense account, and no recovery to be enforced if member has already left the service. Now we will discuss about interest which is credited to the contributions. In case the member informs the Commissioner that it does not wish to receive interest, interest shall not be created to member account. Member account has been credited with interest on monthly running balance from the financial year 93 to 94, that is from 1st of April 1993. Interest is paid up to the end of the month preceding the date on which final payment is authorized, irrespective of date of receipt of the claim. Interest is payable up to the current month. If the claim is authorized on or after 25th of the month and payments are made after the end of the month. Interest recovered from a member for misuse of withdrawal to be credited in interest suspense account only and not to members' account as discussed earlier. In case of release of part payment, interest is payable on the retained amount for want of claim from the entitled beneficiaries. Now we will talk about interest on deposits, contributions due to wrong coverage, voluntary coverage or deposits which are refundable with interest. Interest is calculated at the simple interest at declared rate from the first day of the month on the amount received in the preceding month. No interest is credited to member accounts from the date of grant of exemption. Interest on compound rate is payable for the period between the date of grant of exemption in the month preceding the month in which payment is authorized. Similarly, the payments of interest in special cases like payment not in favor of authorized to be affected from special reserve fund in case of first case of settlement and wrongly authorized payment interest to be paid till date. Authorization of amount to the rightful claim. No interest is payable if amount was wrongly paid by an outside agency. If there is a delay on the issue of a check to the next month, interest is payable up to the preceding month in which check is issued. In case of belated coverage, involvement and compliance members are entitled to get interest statutory rate as applicable for year treating as if the amount was received on time. Nomination is an activity a member is required to undertake upon joining an employment. Now we will be discussing an important aspect called nomination. As we all know, nomination is done under Form 2 and now the provision of e-nomination has also been introduced. In case if accumulation of a deceased member is payable, it goes in the following order. First, nominee under Para 70(I) of the EPF scheme. If there is no nomination filed, then the money is paid to the members of the family under Para 72 of the EPF scheme. In case there is no family, then money is payable to the person legally entitled under Para 73. Read with Para 72 of the EPF scheme. As per Para 72, if no nomination subsists to whole amount or the part to which nomination does not relate shall become payable to the members of the family in equal share, provided that the no share shall be payable to son who attained majority, sons of deceased son who have attained majority, married daughters whose husbands are alive and married daughters of a son whose husbands are alive, while all widows and child or children of a deceased son shall receive between them in equal parts only the share which that son would have received if he had survived the member and had not attained the age of majority at the time of the member's death. Para 73 and Para 72 relates to when there is no surviving member of the family as defined under EPF scheme. In such scenario, the amount is payable to a person legally entitled and this shall be decided based on succession certificate to be issued by a court of law. Now let us go through who can be nominee of a male member. So in case of a male member, nomination can be made in the favor of children. Children can be major or minor, legally adopted or married or unmarried. Dependent parents and children of deceased son, which can be major or minor, married or unmarried. If a male member proves that his wife has ceased to be so under the personal law governing him, she shall no longer be able to be part of family in respect of the scheme. While talking about nomination of a female member, in case of a female member, nomination can be made in favor of husband. Children which can be major or minor or legally adopted or married or unmarried, dependent parents or husbands, dependent parents and deceased son's widow or children which can be major of minor or married or married. It is important to note that if a female member desires to exclude her husband from the family for the purpose of the scheme, she has to give notice to the commissioner in writing to this effect. In such case, her husband and his dependent parents both shall be excluded. Going forward, let us understand something more about nomination. Form 2 revised was implemented consequent to implementation of the EPA's 1995. Nomination filed by a minor is invalid. Thus, minor member should file nomination on becoming major. A male or a female member who have excluded spouse from the family may again include them in the family by giving a notice to the commissioner. A child of the member on being legally adopted by another person stands excluded from the definition of the family under the scheme. Nomination made in favor of dependent parents become invalid on marriage of the member. Member having no family may nominate even an institution of choice in Form 2. A nomination under EPF scheme holds good for payment for assurance benefit under the EDLI scheme. Nominations are to be submitted in Form 2 at the time of enrollment of a member. Form 2 is now replaced by e-nomination received after death of the member should not be accepted, even in cases if it was received from the member prior to his death and kept by the establishment only. The nominee post-deceases the member, that is dies after the death of the member. Before claiming the amount, payment should be made to the heir of the deceased member under the relevant Succession Act. Another important aspect in nomination is irrespective of age and status of son and daughter are eligible for nomination. Daughter-in-law and grandchildren can also fall within the definition of the family of member upon the death of the member's son. Nomination of wife is valid, even if she remarries after the death of the member, and a Hindu member cannot nominate his second wife when his first wife is alive, as second marriage is not permitted under the Hindu Marriage Act. Now let us understand few interesting cases. Nominee, predeceases, that is dies before the member and subsequently member also dies without filing revised nomination. Then it should be treated as a no-nomination case and regulated under Para 72(2) of the EPF scheme, that is payable to eligible family members in equal shares. In case out of the 3 nominees one is not alive on the date of death of the member, Form 2 should be considered and payment should be made to other eligible nominee. So the extent of the share that deceased nominee share is to be regulated as per no nomination under Para 72 of the scheme. Deceased nominee's share should not be paid to the heirs of the nominee, but to be regulated as per Para 72 of the scheme. No nomination case: if no family members of the deceased are available, then settlement is to be made to legal heirs as per Para 73 of the EPF scheme for payment of the legal heirs of the deceased. Succession certificate should be by court of law. Production of succession certificate by legal heir of the deceased member can be waived if the amount to the credit of deceased member on the date of authorization does not exceed 10,000 rupees. RPFC can waive the production of succession certificate to the limit and after inquiring into the title of the claim by referring to civil authority or legal heir submitting indemnity bond. In case of death of a member by murder, copy of FIR should be obtained to verify whether PF beneficiary is cited as accused in the FIR. In cases where guardian under the Guardians and Wards Act 1820 exists, the PF accumulation of the deceased member on behalf of a minor family member. In absence of a guardian, natural guardian is eligible to claim the accumulation of deceased member on the behalf of the minor family member. In options of the natural guardian, commissioner can make payment belonging to minor family member or nominate to any other person being fit by him if this amount does not exceed 20,000 rupees, and in case the amount exceeds 20,000, such as should be made by after sanction of Chairman CBT. In normal course, unless a period of 7 years has lapsed since the date of disappearance of an employee cannot be presumed to be dead under the Section 108 of Indian Evidence Act, family can be paid PF amount having regard to the nomination or legal heir certificate, in case of an employee disappears, leaving his family behind. In case of a Hindu natural guardian, father followed by mother being natural guardian of a minor child. In case of a married girl, her husband is a natural guardian in case of a married minor girl, child wife, but not attained puberty. Mother of the child is a natural guardian of the minor child. Under the Muslim law, the order of natural guardian is as follows. Father followed by executor, appointed by father's will, father's father and followed by executor appointed by the will of the father's father. Natural guardian also are appointed by court according to Christian law regarding to the entitlement of father or mother, with national guardian preference, in respect of payment to a lunatic family member. With the cases refer the Chairman CBT, FACO will offer his recommendation. Accounts can be transferred from an exempted establishment or to an uncovered establishment. In such case is where it is transferred to an exempted establishment or an uncovered establishment, amount to be credited in member account in month. Check received interest to be credit of the total amount of transfer from the first of the month in which it is credited. No interest is payable by the transfer office for the current year transfer effected from one unexempted to another unexempted establishment. On the receipt of transfer in from unexempted establishment in the current year, transfer made or received from exempted establishment of private property fund, interest to be paid as per Para 60 of EPF scheme. 3 months is the time limit to transfer accumulation of a member to an establishment not covered under the Act. The rules of the Provident Fund in point of any establishment which is not covered under the Act permits transfer of EPF accumulation can be made in case of a member leaving an establishment not covered. Interest has to be credited in an operative account for delayed settlement as proviso to Para 66 of EPF scheme, Inoperative accounts are those accounts where the last contribution was received for 36 months away, that is, when an amount is payable to an employee member has not claimed the amount, an account becomes inoperative after lapse of 36 months. In operative cases, inoperative account is handled and Para 72 sub 6 of EPF scheme, creating of interest to inoperative account, was stopped with effect from 1st of April 2011. If the settlement of inoperative account is delayed beyond 20 days from the date of receipt of application, interest shall be credited to the account. Interest to be credited to inoperative accounts for delayed settlements is as per proviso to Para 66 of EPF scheme 1952. A claim has been settled but is received back undelivered, not due to member's fault, not attributable to the member, shall not become inoperative. Thank you for listening. For more such informative videos, please access our bouquet of programs.